Let's address the chart that's haunting every Kaspa holder. That brutal wick around October 10th wasn't just volatility, it was a liquidation event that shattered confidence and reset the entire narrative around this project. One moment you're watching steady upward momentum, and the next, you're staring at a 40% plus drawdown in just minutes. Here's what actually happened during that flash crash. Whether it was triggered by a liquidation cascade where leveraged positions got margin called in sequence, a whale dumping massive holdings, or maybe even an exchange-specific technical issue, the result was identical. Trust evaporated. And in crypto, trust matters more than technology. Currently, KAS trades at 5.391 cents, up 5.22% in the last 24 hours. That sounds encouraging until you realize this is the exact same price level from August 2023. Think about that. 2 years of ecosystem development, technical upgrades, exchange listings, and we're price action neutral. That tells you something critical about market perception versus actual fundamental. The daily chart reveals an RSI of 30, which technically signals oversold conditions. There's also clear bullish divergence, price making lower lows while RSI makes higher lows. In textbook technical analysis, this suggests weakening selling pressure and potential reversal. But here's the reality, check bullish divergence can persist for extended periods before resolving. It's a signal, not a guarantee. MACD and on-balance volume indicators show reduced selling pressure and potential accumulation. Again, these are positive technical signals, but they're fighting against psychological damage from that flash crash. Charts measure price and volume. They don't measure fear, uncertainty, or shattered confidence. And those intangibles drive markets as much as technical pattern. We're sitting at a critical inflection point. Either we get a reversal that reclaims higher territory, or we break down below this 2-year support level. If that 5-cent floor fails, the next support zone sits significantly lower, potentially triggering another wave of liquidations and panic selling. Let's separate the chart from the actual project developments, because Kaspa's technical progress over the past 2 years is substantial. The migration to Rust, a more efficient programming language, improved performance and developer accessibility. The network upgraded to 10 blocks per second, with rumors of scaling to 32 BPS, which would be impressive throughput for a proof-of-work blockchain. Kaspa secured over 30 new exchange listings, expanding accessibility and liquidity. Layer 2 development is progressing, with smart contract functionality and NFTs coming online. Several merchants now accept Kaspa for payments, transitioning it from a speculative asset toward actual utility. The network holds the proof-of-work throughput record with 338 public nodes operating, demonstrating genuine decentralization. Perhaps most significantly, Kaspa has zero venture capital or external institutional funding. It's entirely community-driven, which means no VC unlock schedules dumping supply on retail holders. That's actually a competitive advantage compared to projects where VCs got tokens at massive discounts and systematically sell into retail demand. But here's where we need intellectual honesty. Strong fundamentals don't guarantee price appreciation. Plenty of technically impressive projects trade below fair value for extended periods. Market sentiment, narrative momentum, and capital flows matter as much as development milestones. The current price-to-fundamental disconnect creates an interesting scenario. Either the market is correctly pricing in risks that fundamentals-focused investors are missing, or there's a significant undervaluation that patient capital can exploit. Determining which scenario we're in requires examining the risk factors most people ignore. Let's talk about what should make you pause before loading up on Kaspa at these levels. First, there's still no DeFi ecosystem. Without decentralized finance applications, user activity remains limited. DeFi creates sticky users who stake, provide liquidity, trade, and generate actual network activity beyond speculation. Kaspa's lack of DeFi means it's still primarily a store of value play, which limits adoption vector. Second, open interest collapsed after the flash crash. Open interest measures total outstanding futures and options contracts. When OI drops dramatically, it signals reduced market participation and liquidity. Lower liquidity means higher volatility, which creates a vicious cycle where volatility scares away participants, further reducing liquidity and increasing volatility. Alright, so third, and this is the one nobody really wants to address openly, there's possible insider distribution. In community-driven projects without formal token allocation, early miners and contributors accumulated massive positions. Now, if these insiders are systematically selling into any price recovery, it creates persistent selling pressure that caps the upside. You can't see this on-chain easily, but price action that consistently fails to break resistance despite positive fundamentals often indicates structural selling. Now, the flash crash itself raises some questions. Was it purely a liquidity event, or did someone with significant holdings trigger it intentionally to shake out leveraged positions and reaccumulate at lower prices? We can't prove either scenario, but hey, the possibility is definitely there. Risk management requires acknowledging these factors, Kaspa could absolutely recover and exceed previous highs, but it's not a certainty. Position sizing should reflect this uncertainty. Going all in on a single mid-cap after a flash crash and 2-year price stagnation is speculation, not investment. If this balanced breakdown of technical signals versus fundamental risks is giving you a clearer framework for evaluating Kaspa, hit that like button right now. It tells YouTube this analysis matters and helps more strategic investors find this content. And if you're not subscribed to TJ Crypto World yet, click subscribe and turn on notifications. I'm bringing you the honest analysis that doesn't just repeat community talking points. Now let's continue with the recovery question. The 5.22% daily gain looks encouraging, but let's contextualize it. After a massive drawdown, volatility increases in both directions. Sharp bounces during downtrends are common and don't necessarily signal trend reversal. The real question is whether this bounce has conviction behind it or if it's just short covering and bargain hunters who will exit at the first sign of weakness. Kaspa is now consolidating near 0.055 resistance. This level matters because it represents recent price memory, a zone where buyers and sellers previously engaged. Breaking through resistance requires sustained buying pressure that overwhelms existing sell orders. That typically needs either fundamental catalysts that attract new capital or technical breakouts that trigger momentum-based buying. So, looking at the overall trend from October 12th to the present, we can see a steady grinding upward which, honestly, is a lot more sustainable than those sudden vertical pumps. These gradual recoveries usually suggest genuine accumulation, rather than just a burst of speculative mania. But, we're still quite far from those pre-plunge values. That means holders who bought at higher prices are still underwater. And that could create some selling pressure as the price gets closer to their entry points. The chart pattern right now really looks like an L shape, a sharp drop followed by a slow, steady recovery. For this to actually turn into a true reversal pattern, what we need to see is the recovery pick up speed and break above those previous highs. Until we see that, we're still just consolidating. And honestly, consolidation can break in either direction. Again, the chart pattern is showing that classic L shape, a sharp drop, and then a slow recovery. If this is going to become a real reversal, we have to see the recovery accelerate and actually break above those previous highs. Until then, we're just in a consolidation phase. And, consolidation can go either way. Volume analysis provides additional context. If the recovery happens on increasing volume, it suggests genuine demand. However, if it's happening on decreasing volume, it suggests a lack of conviction and susceptibility to reversal. Right now, the current volume appears moderate, not alarming, but not enthusiastic either. So, what's the actual assessment? Kaspa has legitimate fundamental progress, technical upgrades, expanding accessibility, growing infrastructure, and community-driven development without venture capital overhang. These are genuine positives that support long-term viability. So, what's the actual assessment? Kaspa has legitimate fundamental progress, technical upgrades, expanding accessibility, growing infrastructure, and community-driven development without venture capital overhang. These are genuine positives that support long-term viability. However, price action reveals market skepticism. Trading at the same level as 2 years ago, despite fundamental improvements, suggests the market is either discounting future developments or pricing in risks that fundamentals-focused analysis misses. The flash crash created psychological scarring that, honestly, takes time to heal, and reduced open interest indicates diminished market participation. The bullish divergence on RSI, combined with improving MACD and OBV, creates a cautiously optimistic technical setup. These indicators often precede reversals, but they require confirmation through price breaking above resistance with volume support. Here's my framework. Kaspa represents a high-risk, potentially high-reward opportunity at current levels. The risk-reward ratio favors buyers near the 5-cent support level, with stops below that 2-year floor. Breaking above 5.5 cents with conviction would confirm bullish reversal and open the path toward higher target. Alright, so here's the thing. This is not a certainty play. It's really more of a calculated risk where your position sizing should, take into account the possibility of further downside. If you're thinking about allocating 5 to 10% of your crypto portfolio to speculative midcaps, well, Kaspa definitely qualifies. But hey, if you're considering going heavy or all in, that's not strategic investing. That's gambling. The community's strength and zero VC funding are genuine advantages, but communities can remain enthusiastic while price stagnates if broader market conditions or structural issues persist. Don't confuse passionate community with inevitable price appreciation. If this honest assessment of Kaspa's setup, including both bullish factors and legitimate concerns, gave you a clearer perspective, show this video some appreciation with a like and share it with someone who needs balanced analysis instead of hopium. Subscribe to TJ Crypto World if you haven't already. I'm consistently delivering the analysis that respects your intelligence and your capital. Drop a comment telling me your Kaspa position and strategy. Are you accumulating, holding, or staying away? If this honest assessment of Kaspa's setup, including both bullish factors and legitimate concerns, gave you a clearer perspective, show this video some appreciation with a like and share it with someone who needs balanced analysis instead of hopium. Subscribe to TJ Crypto World if you haven't already. I'm consistently delivering the analysis that respects your intelligence and your capital. Drop a comment telling me your Kaspa position and strategy. Are you accumulating, holding, or staying away? Appreciate you spending this time with me, strategic thinkers. This channel exists to help you make informed decisions based on evidence rather than emotion. Check out my other videos analyzing mid-cap opportunities and risk management frameworks for volatile assets. Stay strategic, stay disciplined, and I'll see you in the next one.